Chargepoint has their next earnings report on the 30th of August in just a few days, and today we are going to speak about it, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor, and let's speak about Chargepoint, baby. But first of all, I want to say thank you so much for hitting the 100 like goal that we set yesterday, and here we are with another video, baby. If we hit 100 likes again today, there'll be another video tomorrow. I appreciate you all so much. Now, Chargepoint has been a stock that I have really been excited about as of late on the channel, and I want to cover everything that you guys need to know coming up in today's earnings. If you plan on making a trade either to the upside or to the downside, if you plan on adding to your long-term position, or potentially you're looking to open a long-term position for the first time. So in order to do that, we're going to be looking at several articles speaking through a lot of good news, a lot of things that happened in the last earnings report. We're going to be taking a little bit of a look at some of the option chain things that are going on and why we should expect a quite volatile earnings period, which can be a good or a bad thing depending on which way you're hoping the stock goes. We're going to be taking a look at a couple of things in regards to margins in particular, because this is something that really hurt XPeng in their most recent earnings report, and we got to be aware of it. But then, of course, we're going to take a look at the technicals. We're going to take a look at the chart, because some very, very interesting things have been happening here. If you haven't been keeping up to date with my last few videos, the chart is looking quite bullish to me. We just need to hope that it can stay looking that way, and we can get some good news through earnings to keep that thesis going and hopefully continue an upward move. Now, I just want to remind you guys of Chargepoint's own description of business, okay? Chargepoint designs, develops, and markets network electric vehicle charging system infrastructure. It's connected through cloud-based services which enable charging system owners or hosts to manage their network charging systems and enable customers the ability to locate, reserve, and authenticate network charging systems. I know you probably asked me, why does this matter? I think if you've clicked this video, you more than likely know at least who Chargepoint are. You know that they're involved in the charging game. But one thing that I don't think a lot of people think about often enough when it comes to Chargepoint is that they are a SaaS company. They're a software as a service company above all else. And the CEO has said that himself. It's not just me pulling this out of nowhere. The CEO has said it in several interviews over the last 12 months. So just think about that for a moment. These guys are a SaaS company. They are more than just, throwing these charging points at you. And it's clear to see when you look at where their revenue diversity comes through. The majority of it is coming from their network charging systems, but then there is also quite a considerable amount coming from subscriptions. And if you bring yourself all the way back to the company's first ever presentation before they went public, remember, especially back in the day when everyone was going public via SPACs, they always had this presentation that told you everything that you needed to understand about the company. There is a lot of focus on this subscription model. This becomes particularly important, okay, when we take a look at this article from JR Research, okay, and we see Chargepoint adjusted gross margins by segment, and we see that their biggest one here, their network charging systems, has gone down considerably. Now, we're going to go through the reasons why very briefly, but you can see this dropping off. The subscriptions hasn't dropped off nearly as harshly over the past couple of quarters, and that is important to keep in mind going forward, considering that we expect the subscriptions to become a much more substantial part of this business going forward. But anyway, that's just something to keep in mind whenever you are looking at Chargepoint yourself. So straight off the bat, Chargepoint is expected to beat earnings estimates. What to know ahead of the Q2 release? So just a couple of the important things. The company is expected to post a quarterly loss of 20 cents per share in its upcoming report, which represents a year-over-year change of negative 33.3%. So right off the bat, bad. A lot of this, again, is coming through because of, supply chain restraints, the China lockdowns, all of the usual stuff when it comes to these EV-related stocks. But potentially, in my opinion, more importantly, revenues are expected to be $101.94 million, up 81.7% from the year-ago quarter. I mean, that's awesome. We want to see those revenue numbers going up very, very quickly. And Chargepoint has had quite a good history of beating consensus estimates over their quarterly reports as time goes on. Now, for Chargepoint Holdings, the most accurate estimate is higher than the Zacks consensus estimate, suggesting that analysts have recently become bullish on the company's earning prospects. So, Wall Street analysts seem to be relatively bullish here. This has resulted in an earnings ESP of plus 2.56%. This combination indicates that Chargepoint Holdings will most likely beat the consensus EPS estimate, okay? Now, I want to tell you what two analysts have recently said about Chargepoint, just again so that you can get an idea of it. Now, keep in mind, Chargepoint's at about $15 a share right now. So a JP Morgan analyst, Bill Peterson, just recently raised his price target from $18 to $20. So already having a pre-established $18 price target shows that he was bullish from the start on Chargepoint. I mean, that's a relatively high estimate for the 12-year growth of the company. Although he expects the company's margins to remain under pressure, which they most recently are this year due to high inflation, Peterson foresees stronger revenue growth from the company in the third quarter and full year as supply constraints ease. And a lot of people this seems to be a relatively common theme, I should say, between analysts, Wall Street and retail alike when it comes to Chargepoint's second half of the year performance. He also pointed out that the Inflation Reduction Act, which we spent quite a lot of time on this channel speaking about recently, that President Joe Biden recently signed into law, will provide added impetus to the growth of the EV industry. The act offers significant tax credits to people who buy qualifying EVs and is therefore expected to boost the industry and benefit large players in it, among them Chargepoint, the largest EV charging related player. So that's what one analyst had to say. And another one, earlier in the week, analyst Ryan Greenwald of Bank of America bumped his price target up to $15.50 per share from $14 a share. So this analyst was not quite as bullish as the JP Morgan one was, but he still has gone ahead and put it up over 10% from where it was, in part due to the improved growth prospects the company will enjoy thanks to the Inflation Reduction Act. Greenwald also expects Chargepoint to beat its sales estimates again when it reports. So just off of that alone, we can see that the general consensus is that Chargepoint is going to beat, which is always a very good thing. Now, I think this is going to be particularly important this quarter for this to happen again. After seeing the gross margins drop, if we see, revenues going down, if we see earnings misses, if we see below expectations being hit and margins are going down, people aren't going to be happy, and we could easily see a 10 to 15% downward move, such as one we saw with XPEV recently. I mean, we've seen it all over the place with companies who aren't even involved in the EV world. Bad earnings are not enjoyed by investors right now, more so than under normal circumstances. But beats are loved by investors right now, okay? And good news is, now there's a couple of pieces of potential good news I'm going to be looking for. We'll get into them shortly, but I want to spend a little bit more time on this article from JR Research, okay? So their thesis as to why, Chargepoint could well be a buy right now. They actually literally just changed it to a buy the day this article came out. They previously were a hold, okay? The company has been beset with supply chain challenges that significantly impacted its gross margins in Q1. Coupled with the rolling lockdowns in China in Q2, we postulate that Chargepoint's Q2 card could also be affected. However, it's critical for investors to note that China has emerged from the worst of its lockdown so far. Everyone should be aware of this if you are in the EV world. As such, we are confident that the supply chain disruptions emanating from China should improve through the second half of 2022. And I think that's what people need to look towards now. And I think that next quarter for a lot of EV will be good. This quarter could go either way, but I think next quarter, particularly the next 2 quarters, should be good for the industry in general, which, I'm sure will hopefully lead to some people picking up some cheaper shares. The consensus estimate, which is bullish, suggests that Chargepoint's overall adjusted gross margins should have bottomed out in Q1. And this is what we are really, 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 really hoping for as investors, my friends. I can't stress this enough. Therefore, investors should expect significant improvements in its gross margin profile in the second half of 2022, which will be critical to its operating leverage improvement. Now, Chargepoint is in a quite considerably decent place. Their short-term assets pretty much nearly cover their long-term assets, although some of that was done through bond issues, I believe it was. There was a raise of some sort. I forget exactly off the top of my head, but you know what I'm saying. But as of this moment in time, they're in a decent cash position. They can afford to, front a few more net losses, as long as we can see good news and we can see revenues going up in general. And with that being said, let's speak about some of the potentially good news that we might get updates on here. So this one here, EV charging station operators set to battle for ad dollars. Now this is a relatively exciting one. Chargepoint, the largest US producer of EV charging stations, is rolling out an advertising display business, okay? So the largest operator of EV charging stations, by the number of stations, will create a nationwide advertising network in partnership with digital display company Ara Labs Inc. and Destination Media Inc., which does business as GSTV and produces video ads at gas stations and other retailers. Now, the first Chargepoint ad displays will be live before the end of the year. This would lead me to believe that in this next earnings report, in the press release in particular, we're going to get an update on this. Hopefully the CEO will bring it up in the earnings call, or else an analyst will have a question or two to ask about it. because this could be a huge selling point for Chargepoint, okay? I mean, it makes sense. The company plans to install approximately 1,000 screens across 10 key markets in the year following the launch. These displays will run ads in and around original 3 to 5 minute videos with news, weather, pop culture content, okay? Awesome. Advertising is the entire world right now. It is absolutely everywhere. You cannot look at a screen without seeing an advertisement. And there is a lot of money in advertisements. And when you think about what people do with charging stations, they plug it in, they're not really doing anything. You may as well have an advertisement there in front of them if it's not going to up the cost too much. But the best thing is that I would assume the cost is just going to be built into the contracts with the people that ChargePoint work with in the future, because it's going to be a mutually beneficial thing more than likely. They also do go on to say that companies do not have to have advertisement presence on any of the chargers, which I do personally think is a good thing, because I'm sure some people won't want them involved, but now the option is there and it will be mutually beneficial, I am sure. I'd like to point out that the option change in open interest once more for Chargepoint has been considerable. You can see the open interest change, the change in the number of option contracts traded but not yet liquefied, has gone up like crazy for Chargepoint here. The implied volatility is at pretty much 100%. Now this is for a contract expiration date tomorrow. If you keep an eye on this, I would expect this to only get crazier over the next 2 to 3 days. And I would expect some big moves on the 30th when these earnings do come out. So what have we gone through so far? Well, I think we've established that potentially the most important thing is seeing what way our gross margins go, okay? I'm sure a lot of people will want to see the EPS beat. We want to see a 20-cent loss per share. And I think any EPS beat would be very good, even a 1 or 2 cent beat. But I really want to focus on those gross margins and, of course, the revenues. And ideally, I would like to see the network charging system margins get considerably better, because realistically, we can't sustain this. We can't let Chargepoint go to 1 or 2% here. It's not what we want. It is moving backwards. It's not what we want to see. If we could see a 3.45% push back to the upside here, a 3.45% increase in margin, I think investors would be happy. I personally would be very happy with that. We've seen that it's more than likely going to be very volatile when we just look at the options contract. We've seen the analysts in general seem to be bullish and seem to think that we can expect a beat. And overall, it's looking promising. Now, of course, guys, this is a crazy time in the world. There are a lot of things that have gone wrong, and the earnings could go wrong. So I'm not trying to sell you a dream here. I'm not trying to give you a guarantee here by any means. This will be, I say will confidently, a high risk, high reward play if you are playing it in the short term. Now, with that being said, we'll have a little bit of a look through the technicals here. I did a video going through the technicals of these and 5 other review plays just yesterday. If you missed that one, you can click up in the screen right around where my face is right now, and you can go have a look at that if you want to get a bit of a broader understanding of EV moves, not just Chargepoint. But really quick update. So long-term, huge downtrend, okay? But we've had this downtrend happen. We've had our peaks that we can't beat out, and you can see it's created this black line here. Only recently we broke out above it. Not only that, within a week, we broke out above our relatively long-term area of resistance. Now, last time they broke out above here, they went for a week, hit this black line, and went on a huge sell-off. And you can see what happened here is they broke out above it, and again, a relatively large sell-off. Nothing compared to this one yet, but who knows what is going to happen here. Now, I would like to say they have maintained strength above this downward trend line. And if they can continue to do so, I see no reason why they can't continue this relatively healthy upward move. Now, don't get me wrong, this is a downward move altogether, but if we go back to here, to May, we have seen an uptrend begin to form. We've seen healthy consolidation, we've seen up and down moves, we've seen gaps get filled in, we've seen a lot of good things happening. With that being said, it's not the most beautiful chart in the whole wide world, but the price action is healthier than we've seen throughout pretty much any of Chargepoint's history. So my expectation would be that if things go well, we can break back through that 1762 mark at a minimum and hopefully push towards 20 if there was a really, really good earnings report. On the other side, okay, if they are to break through this downtrend line once again, we can easily head back down to the $11. I think from what I've said in this video, you guys know which way I think it's going to go, even though broader economic news would say that it should go down. Chargepoint has been performing, and again, I just think if we get that gross margin beat, investors will be very, very happy. And with what we see going on the options chain, it seems to be that people are expecting an upward move. But anyway, my friends, that is my updated thoughts on Chargepoint coming into earnings. More than likely, it will be the last time I cover them before earnings. So, you know, go off, have a think, look at the chart yourself, see what you see. Always make your own thoughts and opinions. I'm not telling you to buy or to sell. I'm trying to give you a fair understanding of what the general consensus and general understandings are between retail and Wall Street. If you did watch all the way till the end, you, my friend, are a true legend, and I really do appreciate you. I don't just say that for the sake of it. I say it because I really do. Yesterday's video, I think, only got like 700 views or something, but you guys got me over the 100 likes, which I asked for, which just goes to show, you know, a lot of people who are watching the videos now really are here to support, really are here for the content, and that means a lot more to me than just having lots of views for the sake of it. So, genuinely, thank you all so much. With that being said, please do hit that like button if you haven't yet. Drop me a comment down below. Let me know what videos you would like to see from me, and please do subscribe if you're new around here. Anyway, guys, I hope you all have a beautiful, blessed day. I'll see you for another video very soon. Peace.